Welcome, everybody. So we are here to talk about fundraising strategies for 2025 and beyond. And I have an excellent panel of experts. I will start by letting them introduce themselves because I considered introducing them. And I think I know Jen and Ed well enough, but then I went into like Scott's background and it was so extensive, I decided this would be too difficult. So to do you justice, so please, would you like to start?
Okay, no pressure. Thank you. Hi, everybody. My name is Scott Hartsman. I've shipped a bunch of massive and live games and platforms over the years at a mix of startups and established companies. So I've bootstrapped one, did one with strategic funding, two with venture funding, and these days I help other people's companies with that kind of stuff and more. Although I do have to say I do still think of myself as a developer at heart, and I'm sure I always will.
I'm Jen MacLean, longtime industry veteran. I started as a playtester at Microprose way back in the day, and I worked my way up. Most recently, I was the GM of partnerships at Xbox, where my team ran the largest third-party partnerships. Left Xbox to start a game studio, and we founded our company last October, and we have just been to Gamescom with our vertical slice.
That's great. Ed?
I'm Ed Rhys. I dropped a subwoofer on my foot last night, so it's feeling good to sit here in a chair.
Okay.
That's pretty much all you need. Well, all right.
No, seriously, tell us.
I run a venture fund called One Up Ventures with my partner Kelly Wallach, who has a long history in the indie game business. And we've invested in over 80 small companies over the last 6 years.
That's great. All right. And I am Rhys Dekle. I've been in the industry for like 20 years or so. I spent a dozen years at Xbox where I had lots of fun times. And I guess like one claim to fame would be that I bought the Gears of War franchise or arranged for buying the Gears of War franchise away from Epic at a certain point, and accidentally funded their next game, which ended up being Fortnite. I'm glad that Epic Games is sponsoring Slice today, and this is great. Everybody wins. I also am the architect of ID at Xbox. It was just kind of a passion project for myself and a bunch of other folks who were very disturbed that there wasn't a path for indies to self-publish on the Xbox, and that was the end result. And I believe ultimately, like you watched over ID at Xbox some too, right? And third party, was that not in your mandate?
No, that was Chris Charla,
Yeah.
who does an amazing job. My focus was EA, Epic, Ubi, Take-Two, like top 20 publishers.
Great. And then I left Microsoft and I started a strategy consulting and M&A firm with my business partner, Bob Wallace. And I've been doing that for the last 10 years. We have about 40 clients or so at any given time that are independent studios. For the most part, they are independent studios, a couple of publishers, and a few adjacent technology companies. But we advise them long-term on lots of issues that include fundraising, both for project finance as well as investment or equity finance. And so we're constantly out in the market working with our clients trying to identify and source and fundraise. And so I guess that's why they asked me to do this. So I'm really excited because I love the backgrounds for all of these people. I've known these people for a long time. And I think I'd like to start by just like level setting, like what is it like out there? And I'll let you take your own angles on it, but like, how would you describe the environment for fundraising in 2025? Ed?
It's getting better, maybe, I'm going to say. I try to be optimistic. It's been a weird few years, you know,
Okay.
between the pandemic kind of boom and the post-pandemic bust. But we're still doing deals, and there's still people to do deals with out there. You just have to look a little harder. So that's what I'd say.
Jen?
Wow, this feels very personal. From what I have seen, like you had the funding pendulum go way in this direction where, frankly, a lot of teams and projects got funding that probably shouldn't have. And then it went way in this direction where a lot of teams and projects who should have gotten funding haven't, particularly because there's been such an overcorrection in the publishing space. And we can talk about whether VC should have been in the business of funding content, and it would be great to get Ed's perspective on that. But now it feels like we're sort of start coming back here, and maybe we're starting to get to a slightly more normalized place.
Yeah, it's a big reversion to the mean after the way too excited years of COVID, when everybody mistakenly thought that 30% growth is the new normal, when I think many of us knew that that wasn't going to be the case forever. I guess I would also, if I wanted to describe this year, it would be a declining trash fire.
That's a good characterization.
Yeah. I'm independent. I can say stuff like that. So.
I just got back from Gamescom, and one colleague I was talking to described this year as less sucky than last year.
That's about it.
And that felt about right to me, yeah. So given that, let's talk about when we say fundraising, it's pretty broad. Obviously, it could imply you're trying to get your studio together and you're trying to raise financing from your sales of your equity or something else. Or it could be project finance based in that you have a studio, it's already generally set up, but you want to make a game and you want to find funding for that game from start all the way to finish, ideally. So with that, let's talk about equity finance first. Let's talk about if you want to start a studio today, what are the sources that are available? Who do you go to? How do you approach them? Jen, I think you've kind of been down this path, so you're best qualified to tell us.
We have, and I think starting a brand new studio is a particularly difficult proposal, right? Because unless you are a Dan Hauser or someone who has a really phenomenal track record, it is going to be hard to find people who are willing to write substantial checks for a team that has not shipped a game together before in 2025 without some super, super amazing hook or playable software. And so for us, we have raised over $750,000 in equity through angels using a safe note. And the way that it's been an inflection point even in the last 2 weeks, because we went to Gamescom with a multiplayer vertical slice. Hour and a half of content, plays really well. And that has gone from, I'm going to invest in you because I know you or your friends or whatever, to a, wow, okay, you've shown that you can, as a team of 7 in 6 months of dev time, make a actual game. Great, let's talk. And so for me, I think if I were to give people advice, it is figure out how you are going to get to vertical slice. That is going to be the hardest part. And then once you get to vertical slice, it opens so many more options.
Scott?
Yeah, I would echo everything that Jen just said. I think the one thing that people can really do, though, on top of that is keeping their scope in mind. No matter how far along you are toward a vertical slice, nobody is going to give big company employee number 2,000 a $50 million check to make a game at this point, right? I saw Jen's game actually at Gamescom, and it's looking amazing for a team that size, that speed. And I think that you really need to keep an extremely tight control on scope when it comes to trying to get anything funded that route anyway.
How about on the equity side? If you're trying to build a studio today, like how would you're an angel investor, among other things. Like what do you notice anything about the things that you're willing to have any kind of conviction and invest in?
Certainly. I think the biggest thing is that differentiation really is taking center stage, and I think people are paying a lot more attention to it, where, if you look back toward the high times of 4 years ago, it was about pedigree. It was about who, not what. where these days it's much more about what. And I think that, we all know that in modern era of entertainment, we can all fill every free moment of our day with essentially stuff to do for fun that we don't have to pay any money for. Right. So essentially, us as game developers, I hate saying it, we are in the business of stealing other audiences. So if what you're making isn't going to be good enough to make somebody drop something that they're super excited about right now, it's not compelling enough. And to me, that goes to the core of what is it that's being pitched, right? It's the core of what exactly are you making? And honestly, I think it's on us as developers to really get a handle on that before we go out and asking for money, because we need to know where our audience is coming from.
That's right. I very much agree with that. Ed, would you say, I mean, as a VC, and you see pitches all the time, should anyone who's wanting to start a studio approach and go the VC funding route?
Absolutely, of course they should.
We had a breakfast about this a long time ago.
Of course they should.
Oh, yeah?
Yeah, I mean, basically going the venture route is going to let you get a lot farther along. It may get you far enough along to actually ship the game, or it may get you far enough that when you go into a discussion with publishers, you're in a much better position. You have a much better product, just like you were able to raise a bunch of money first. It's on a safe, but that's still equity. It's going to convert to equity. And so that's a great reason to do it.
Do you think every developer, though, is going to find VC funding? Or do you think...
You should have come to my my roundtable.
I'm sorry that I missed it.
We talked about so many different ways that you could fund.
Okay.
And there's
We'll
a
go
lot.
into some of them.
There's a lot of them, but you're right. It's not for everyone. I mean, equity investors, weird thing. At some point, they're going to want their money back. So you really have to be on a track that you're going to build a company, grow it, and then sell it, roughly in a 10-year kind of time frame. And if that's not what you want to do, you shouldn't do it. Also, I mean, the equity rounds for games in the U.S., typically they need to be kind of at seed stage, the first priced round. They need to be kind of $3 million and up. So if they're smaller than that, it's hard for the lead investor to make sense of the deal. Mm-hmm. So that's going to eliminate a lot of people right there.
Right. Needing $3 million? I bet a lot of people in the audience feel like they could do a lot with $3 million, right? They love that.
So they're not asking for enough money. That's what I'm saying.
I see.
Yeah.
Okay. Scott, do you have anything to add on that?
Yeah, and I guess the counterpoint to that is that it comes down to knowing exactly what it is you're selling for that $3 million, right? I think that Ed is totally correct that, venture and equity still has its place. It's just at what scale does it make sense? I'd go so far as to say 75% of the people who have been considered games VC over the last 5 years have absolutely no business being in games VC. The games industry does not spit out billion-dollar exits at a rapid enough pace for the venture model to make sense. And I don't say that to be mean or they're jerks. I'm just saying it's a math problem. Right? If you look at what a fund requires in order to return to the people who gave them money in the first place, we're not creating a Riot Games every year in the games industry. If you look across live games, it's even worse right now. The average age of a top 20 live game is 12 and a half years old. We make, in live games, one enduring hit every 18 months. That's not, that's just not the same thing. So. Again, this is why I keep harping on scope and knowing what you're selling.
And who do you think's who would be an excellent candidate for VC funding? I mean, Jen, you clearly are. You kind of embody that since you got it by definition. But what do you think?
I know that I do, and all of my funding has come from angels, and I have talked to every games VC out there. And part of it is that a lot of them will say, "This is awesome. We're not coming in until seed." And so you have to get your initial funding to get to vertical slice, to get to seed, right? I had one person running a fund saying, I don't invest people who worked at big tech. I've run into.
Wow, the Microsoft bias.
Yeah.
Darn.
I mean, it's like, okay, I've also run nonprofits, and if you want to talk scrappy startup, you do not get more scrappy startup than nonprofits. But we're also building a game that is a multiplayer social role-playing game that is a city builder. And so many people that we talk to, if they have kids, they get it. They get it right away. And if they don't, and a lot of people you talk to in VC don't have kids or their kids are young,
Yeah.
they're like, I can't understand this. I can't understand what you do in this game. And so it can be, again, especially without playable software, it can be really challenging. And I think that as an industry, we don't talk enough about the different phases of VC funding.
Okay.
Because what someone is looking for in pre-seed is different than what they're looking for in seed.
Okay.
Is different than what they're looking for in Series A+. And the way you have to approach an investor at those different phases is very different. And you also have to really do your homework about, like, hey, does this fund even do pre-seed investments? We aren't talking about that enough. And I think because of like 2020, 21, 22, everyone's like, oh, I can go out and get a check for $20 million, and nope, nope. Unless you were Dan Hauser, these days it's just not happening.
I very much agree. I mean, I think it's quite clear that a lot of the VC funds that have been in the space for the last 5 or 6 years, several of them are not really quite vocal at this point, and not actively investing. And I do kind of feel, to what Jen said, like there were too many, the math didn't work, and now it's culling to a point that I think hopefully it's more sustainable, because I think there always is a role for VCs, obviously. We'd love to have more of them, but the math has to work for everybody, right?
Maybe we got rid of the 75% Scott doesn't like.
Here's hoping.
That's what that's what Scott's hoping. Before we move on from this, could you quickly, Scott, could you kind of talk about pre-seed, seed, A?
Sure.
And how you'd think about that. If you're starting a studio, should you presume that you're going to go all the way to A?
So I think it depends a little bit on who you are, what you're building, and what you need, right? Like one of the funds that I talk with all the time is called, Sisu Ventures. Sisu, they write relatively small checks.
They're out of the Nordics.
They're out of the Nordics, yeah. But they work with, they work with people in Europe. They work with people in the U.S. They have like almost an incubator model. So if you're a founder who needs, a smaller check, but really wants that extra support of having, experts there to help you along the way, their founders of their co-founders of their fund came out of the games industry. So these are people who've built studios, they've built franchises. Yep. And so like that kind of thing, I think is a fantastic thing if you need that. Yep. At the same time, when you asked earlier which kinds of people that, founders should talk to, everybody who's worked in the industry will tell you it's Ed. I'm absolutely not kidding, right? Mm-hmm. Because
True.
Again, your fund, how old is your fund at this point? Like, it's not that old.
We're near the end of our second fund, so we've been doing it about 6 years.
Okay, so but in 6 years, you've built up what is widely regarded among the game startup community as the best community of funded companies, right? And so, you've got this differentiation that is super positive. And I think that's fantastic. And so really, you go down this list and figure out, okay, what do you need? How do you get started? And then what do you need to finish, right? From there, do you need to go raise, after you raise a seed or a pre-seed, do you need to go on to an A? Are you going to sign with the publisher, right? Are you going to do the biggest Kickstarter of 2026, right? There's a bunch of different avenues, and there is no such thing as a linear path anymore. All of that linear stuff is gone.
The other thing I would add is that, the graduation rate for a game studio that has received seed finance to A is about 10%.
Oh, it's terrible. Yeah.
9 out of 10 are not going to get, and doesn't mean that your game's not good, doesn't mean your studio's not great, but maybe you're not on that path to get an A, or you don't have what it takes to get an A right now. But there are still other routes open.
Yeah, exactly.
Exactly, right? And publishing, getting a mix of venture as well as then doing a publishing deal is actually something that people can do. Mm-hmm. and still.
Yeah, and actually, if you look at, so Playable Worlds, Raf Koster's company is one
Yeah,
of the ones that I work with. Raf has been very public about, look, the world changed while we were in the middle of all of this. And that team put together a Kickstarter that I was super, lucky to be able to be at least this much involved with, getting to see it from the inside. And it was a great way to get them into their next level of testing.
Yeah, no, it looked great, and that Kickstarter did very well, and they deserved that.
Yeah, for sure.
Absolutely.
The Kickstarter did well, but the Kickstarter really brought them an individual investor who put even more money in the company.
Yeah, exactly. Before I end this and close this, because I want to go into project finance, because there's a lot of meat there. Can you approached angels? Can you tell a little bit about what do you, as a founder, when you're thinking about going to angels, what's in your mind? How do you go about it?
It's such a great question. And I think, first of all, you have to ask yourself what the angel is going to expect. Like, we have some angels who are like, I do this, like, I don't want anything, just keep me posted once a quarter. We send out like quarterly updates. We have other angels who are like, when can I play the next build? When can I play the next build? Like, there's no such thing as free money. And particularly with angels, you have to ask yourself if you are willing to take the hit of potentially costing this person their investment. Like, that's a cost. That's a real cost. And if you're not, you should not approach them for an angel investment. And we've had conversations about saying, like, I don't know if I want to risk this relationship with this person. You also have to think about the mechanism too. So when we first started approaching angels, we had a safe only with a discount, not a cap. And we lost out on a very large potential angel investment because we didn't have a cap.
Can you explain the discount cap real quick?
Yeah, so SAFE stands for Simple Agreement for Future Equity. And it is a way to say to somebody, hey, give me money now, and when we have an event that prices the company, then we will either give you a discount. So say you have a seed round that prices the company, values the company at $10 million, and you do a 20% discount, the angel's investment converts at an $8 million valuation. Then you also can implement either or and a cap. And a cap essentially says that, say we don't take any more money and one day we get bought for $1 billion, somebody who has invested $25,000 is going to be sad because they're going to own such a teeny little tiny, I mean, they'll get money back, so great, but a cap says, we will convert your investment at a maximum valuation of this amount. So it's a protection, and a lot of savvier angels expect both a discount and a cap, especially in this market. And so kind of looking back, one of the big lessons for me was maybe being a little bit too optimistic about the fundraising market and not going out with both a discount and a cap.
I'll just mention I've seen the flip side where people raise with like $1 million cap or maybe even less and don't really realize that they just sold a big part of their company.
I mean, full disclosure, we have a 20% discount and a $15 million cap. And we did that assuming that if we took a seed round, it would likely be around a $20 million valuation. So it's kind of somewhere between a conversion at 15 to 16 million. But we were super thoughtful about it and like talked to people, including Ed, about like, hey, what are you seeing in terms of seed round valuations right now? And I think it is really important to go out and do your homework. And one of my lessons also was that we probably tried to raise a little bit too early. And we should have talked to a lot more people before we started talking to potential equity investors.
Who would you have talked to, for example? What do you mean?
So when I shared that I was starting a company and who my two co-founders are, and I'm super lucky to work with co-founders who have amazing track records, we got a lot of inbound interest. And I really wish that I would have said, like, hey, we really want to talk to you, but in 3 months. And it's really, especially if you announce something and you get a lot of positive attention, it can be really tempting to have the conversations.
I see.
But we were so much better prepared in January than we were in like October, November.
In terms of who you were as a studio, what
Who
you were
we
gonna
were,
do.
what we were doing. Our pitch deck went from a really lovely designed pitch deck that had no relation to our game art to actually using concept art from our game. Like, stuff like that makes such a big difference. Yep. And so, again, really in retrospect, I wish that I had not maybe had quite so many stars in my eyes, and instead said, like, no, we're not only going to be focused on what we want to do, but we're going to be focused on showing we can do it beyond just what we've done in the past.
That's great. So, all right, I will definitely jump over now to product finance or project finance. Not that I can actually see it very well, but is there, who here, raise your hand if you're seeking project finance, publishing deals, funding a vertical slice? There's definitely a decent number of hands. And yeah, they are all like very close, very paying close attention. And then who is trying to raise equity finance? There are a few out there. Okay, all right. They're in the back. They're in the back. They're like chilling. They're like, yeah, this is rough. It is rough. By the way, I will say I always judge the CEOs by their ability to raise money. It's one of those critical things. And so, if you find it difficult, it's because it's freaking difficult. But, if you survive and make through it, you're the better for it. On project finance, it's today, I'll say one thing about the market, which is I have noticed that publishing has always been the main route through which games have been made in the past. The last year and a half, 2 years, I've seen increasing risk aversion on the part of publishers to finance things. Used to be back in the day, we would see a paper pitch with a good team and we'd put some money down on that. Those days are mostly gone, almost entirely gone. Can you guys tell us like what you know about what's going on in publishing today? And also just any mention you want to make on how do you start raising funds for a vertical slice if you don't have that?
Yeah, I mean there's a massive catch-22 in the first not really even vertical slice, right? It's just the proof of concept. Yeah. Nobody is buying proof of concepts right now, right? And that's just the way it is, and it's kind of sad. So that's now the domain of people who work a full-time job and want to do something in the evenings, or people who've had other exits or have a bunch saved up and they want to invest all their own money. One of the things that I have seen, and I consider myself super fortunate to have worked with so many startups that have gone down this route, is I'm starting to see lots of term sheets come in from publishers that are doing project financing. And I can tell you that over the last 2 years, the terms have gotten, a little more strict. There's a couple where, if you don't read it right, or if you don't read it correctly, you realize that may not realize you're effectively an employee of a publisher who doesn't get any of the benefits of being an employee. You may realize that you may own your IP on paper, but you don't actually get to do anything with it other than with this publisher or without this publisher's blessing. So it's actually now their IP effectively. And so it got so crazy with some of these that I actually put together a sheet of like the top 80 things you need to look for, and I've had I've run through the exercise of
top
seriously,
80 priority
it's like 80
things.
friggin' things. I am no lie, no exaggeration. Actually, Jen saw it, yeah. And if anybody, by the way, anybody who does get a term sheet, pay me $1 so I can be an advisor and you can legally share it. Scott@hartsman.com. I'll gladly run it through. Seriously, I will do anything I can to protect developers and make sure that they own their own IP. They get to be in charge.
Absolutely.
I mean, if you're not going to do that, why go out on your own, right?
Right.
So anyway, the deals are being made. In a lot of cases, it's requiring, hey, where it used to be, what's the deck look like? Now it's, what's the deck look like? How many, oh, you have a Discord? Great. How many people in your Discord? Oh, you have socials? Cool. Oh, you're doing you better be doing TikTok. How many people on your, show me your last 2 TikToks. And, oh, great, you're on Steam? Awesome. what's wish lists, right? And so it's, they want to go farther and farther down the funnel before they're willing to actually engage. And this is one of the things that, again, I think Jen is smart as hell, and her team is fantastic in that even though they're not that far down, they're not out collecting wish lists. Oh, they got something better. They got something you can play, right? And so that, in a lot of ways, it's the concrete thing that really substitutes for a lot of that hype.
One of the things that I'm really excited about is seeing hybrid deals that include both equity and project financing, because to me, that is the best of both worlds. Equity investors have a very specific expectation in terms of outcome. Publishers have a very specific expectation in terms of outcome. And sometimes your interests are not aligned with somebody who is doing a publishing deal or doing an equity deal, frankly. And so from my perspective, having both of those models on the table gives whoever is writing that deal a little bit more skin in the game and gives them a reason to focus both on short-term and long-term success as opposed to one or the other. And as we start talking, more and more, and we are really excited about that model.
Ed, what do you think?
Well, I think there's a question about, some of this is related to what we talked about earlier about whether when there was a lot of venture funding, it made it easier for publishers to sit back and get involved later. And that period may be coming to an end for them, and they may need to start looking earlier again if they're not getting enough content flow. Because, we see a lot of projects getting canceled, but I can tell you from running a publisher for a long time, the decisions you make now, you regret 3 years from now. And they're going to need content. And so you do see some interesting things going on in the market. For example, Crafton just started their own incubator. And so even though, they have kind of what I think is sort of an...
Blue Ocean, right? I believe it's
Blue Ocean, yeah. So what I think is kind of they basically won't look at you right now unless you have a playable build, which, to me it says you're looking pretty late. But then sort of to counter that, they started this Blue Ocean incubator. So that's interesting. Maybe more publishers will go that route. Maybe lack of VC funding will force some of them to go look earlier. We'll see.
I'd very much like that. My personal feeling on that is that I've all the time in the publishing world, I've never really seen publishers like shy away from risk and then go back and take more risk. Like, I think they kind of get used to a certain mode. And so I'm a little pessimistic myself, but I would prefer if they did go back and start earlier. I think
what makes them change is when there's a hit and then they go back and look, why didn't we get that hit? Why didn't we see that game?
Yeah. Yeah.
I'm also super excited by some of the new publishers that are starting, especially in North America, because the largest publishers in North America who 5 or 10 years ago they would have been the first that you would call. They're not signing titles right now. But you have new publishers like Publish and Lyrical and Cool Down and Digital Banditos. And are they going to write you a $50 million check? No, they are not. But if you are making a game with a $2.5 to $10 million budget, you've got more options, and you've got options that I think are looking at bringing new models to the table that are really exciting.
Here's one piece of advice that I typically give clients as well as new studios that I'm talking to in terms of advice. But feel free to disagree if it doesn't sound right to you. But one thing I tell clients is, if you're going to start a game project now, and you're creating plan A, plan B, plan C, I would plan A that you're going to self-publish. Because everything you need to do to self-publish, you're going to need to get a publishing deal the way that it's lined up today. And so if it happens along the way, and that's the right thing, then great for you. Publishing deal is your plan B. Your plan C, it's probably something else. So you should start thinking about it.
Totally agree. Absolutely agree. Again, coming back to the way math works around venture, is, especially if you've taken equity along the way and then you do the publishing as the backup, right? That's going to impact pretty strongly in how much you're going to be able to, how much you're going to be able to bring into yourself. You're giving away a good chunk of your, a good chunk of your money elsewhere, which is going to affect your ability to grow, which is unfortunately the whole name of the game.
I slightly disagree. And I slightly disagree
Please.
because I think while it has gotten easier and easier to publish, not just on Steam, but also on the platforms, we can overlook the value that a good publisher can bring. Yeah. And unfortunately, there are a lot of not good publishers out there. And so from our perspective, like what we are looking for from a publisher, first and foremost, dev funding. Second, go-to-market expertise, because the go-to-market motions are changing so fast, right? Like so fast. Having a team that thinks about this every single day, that is up on the latest, is really, really valuable. I think that's also the area where a lot of publishers, especially traditional publishers, are weakest, frankly. And then third for us is commodity services. So we want to keep a really small team. That means that if somebody else will take over things like loc and accessibility importing, like your players only notice if you really mess those up, and it's not going to be a core differentiator to your player experience. So if I can work with a publisher who will take all of that away from our small, currently 7, one day 20-person team, great. I am happy to give up a reasonable percentage on the back end for that.
Yeah, I think about it a little bit like I think about agents. You really shouldn't give like one piece of advice to every team. I mean, should I have an agent? Well, do you need an agent? Like, do you know how to negotiate a publishing deal? They're pretty complicated. Do you know the right people to set up the meetings with? And is that what you want to, how you want to spend your time?
So in terms of other things that you can do, let's say for the moment, you're trying to approach publishers, but publishers are not interested because you don't have a playable build. Forget about it being in vertical slice territory. It's not even a playable build. You've got a great concept. You might have a good pitch deck. You might have a performant team. What do you do if you can't find publisher finance?
I think there's no excuse for not having something playable within your first 6 months, to be blunt. And I know that is a bold statement, but to kind of give some context.
Throw it down.
Like, we started development in February. We went to GDC with a playable prototype of our exploration model. And that was with a super, super small team. And we did that because we knew how important it was just to get something into someone's hands. And kind of the way that we structured things is, around once a quarter, I will send out an update to everyone we have talked to who has given me permission to update them, and everyone gives you permission, and it will say, hey, here's what we told you we were going to do, here's what we did, here's what we're going to do next. And even though no one signed us, obviously, on the prototype, it starts to create that trust, and it starts to create that relationship. And having just that little, 5 minutes you could play, and having a Steam Deck where we just, here, play the game, set us up so much for success at Gamescom, where we came with the multiplayer-enabled hour-and-a-half content of the vertical slice. Mm-hmm. And there were a number of people who said to us at Gamescom, you said you were going to do this, and you did it. And you could see the stars in their eyes. It was really awesome. So from my perspective, one of the pieces of advice that I would give most strongly is get something playable as quickly as you can.
Great. What about if you've got no money, you're not a team because you don't have employees, but you're just a band of people, and you start to create something on the weekends as a side project, et cetera. At that point, you've got no financing, you're completely bootstrapping. What would you do?
So step 1 is don't quit your job. Step 2 is read your PIIA. If you are at any kind of tech company or games company, you have signed a proprietary invention assignment agreement.
Yep.
It tells whether or not you own anything you create on your own time. Most reasonable companies, I know I've always done this, will allow exceptions if they're done on your own time,
Yep.
and we can amend this anytime. You know, I've got one of my former engineers from one of the games is now like an award-winning New York Times listed author, and he started doing that when he was working for us. God bless. I mean, you know, do whatever. So I mean, you can get stuff going these days, you know, straight from the asset store, right? There is, like Jen said, there's no excuse for not being able to do that.
Right.
As long as you make sure that you legally own it, great. You know, work on a side project while you're actually having a job. There's nothing wrong with doing that. And honestly, some bosses out there will support it. I did.
Yeah, we
go ahead.
just comment on that. I mean, that's a question we often ask when we're meeting with teams. If we're talking to people who are still on the job or they have team members on the job, well, do you understand your relationship with your employer? And sometimes they do, and sometimes they don't.
No, that's an excellent point. Can we make a quick comment on community and the importance of cultivating community, and at what point and how? Because again, I have noticed so many publishers who, to your point, Scott, ask for that proof of product market fit, which is code for how many wish lists do you have, how big's your Discord community, how big's your Twitter following, etc.
So we are planning to ship summer 2027. We launched our Discord 2 weeks ago. And we've, you know, it's small. It's around 300 people right now. We're going to do our first friends and family playtest next week. If you want to join our Discord, sign up there. Shameless self-promotion. But we did that really deliberately and thoughtfully because we wanted to build that community. And we are so committed to getting feedback from our audience, getting it early, listening to it. We might disagree with it, and that's okay. But really setting the expectation and the team value that we are building this together with our players. And I know we talked to a publisher at GDC, and for us, when we think about the right publisher, the first requirement is that they have to be willing to innovate on the marketing side. Like, we talked to a publisher who was like, no, we always launch our community here, and we launch our socials here, and we do this here, and this is when we do a trailer, and we do not deviate from that playbook. And I was like, then we're not the right company for you, and you are not the right publisher for us. So best of luck to you. And I think, again, kind of going back to what a great publisher can bring, like having someone who can say, hey, one of our other companies did this in their Discord, and it worked out really well. Or, hey, we tried this, and it worked out really well. That's incredibly valuable, but you have to go into it with an open mind. And at least from our perspective, especially building a multiplayer social role-playing game, we want our community involved now.
Right. Great. Scott?
Yeah, and marketing has changed so much, right? And you know, everything that you do during the marketing phase, during the build-up phase, right? It's all about increasing probabilities, right? There's nothing that's going to guarantee an outcome. And you know, for that publisher, you know, they have their path, and maybe they believe that their path is, you know, is the best probability. I think that your way is probably better and more modern. You know, these days, you know, like classic PR, as much as I love all the PR people I've ever worked with, I really do, you know, classic PR doesn't have the same push anymore, right? We're not out chasing magazine covers,
Right.
As much as, you know, as fun as that was to get one, they just don't matter, right?
Right.
You're chasing Co-Carnage falling in love with your game, right? That's what you're chasing these days. And so I'd go so far as to say, not only does it impact marketing side, it also probably impacts development side. Because like if somebody said, Scott, start a studio tomorrow, honestly, in the back of my head, it would be, you know, if I'm going to make this game, before I get started, I need to be able to pick out 10 streamers that I think would be excited about playing it. Because like, other than that, how else do people discover games these days? It's YouTube, it's, you know, it's Twitch, it's the algorithm on Steam.
Yep.
I think there's a generational thing there that's easy for us to miss. I mean, obviously a bunch of this stuff has changed, but, you know, we try to not just invest in, you know, kind of groups all over the world and you know, very experienced teams. We like to bring in some really promising newcomers too. And that's where we'll see some real innovation in this area. You know, one of our teams I'm thinking about who was started putting out these little YouTube shorts. And they were a little cute, little dog, you know, running on the, you know, and I mean, it wasn't even like that funny, or I don't know. It's just like, okay, you know, if I looked at it, I was like, all right, I'm not sure what that's going to get, and then it'd be like 1 million views, 2 million views, and it was like, holy crap, you know,
Right.
you know, so we have to be
They know
always. The game industry is always reinventing itself, and that
Yep.
the next generation, they have their own way of speaking, own way of getting attention.
Completely. Yeah.
I think you can also, especially if you're coming from a larger studio or larger company, you can take what might feel like a weakness and turn it into a strength. So our chief creative officer was design director on a game that was published by Microsoft, and she couldn't post on social without Microsoft's approval, right? Like, she is so happy she can post whatever she wants on Discord, and she loves it. But whereas a large company might have 15, 20, $30 million to throw against a marketing budget, they're not going to be nimble, they're not going to be fast, and they're not going to be transparent with their players in the way that we are.
I agree.
And so for us, instead of like going, oh, I wish I had 30 million for marketing, we said, okay, what can we do that an EA or an Epic or a Microsoft or a whoever can't? And let's really lean into that and figure out how we can use those things to really turn them into superpowers.
Yeah, that's an excellent point.
I just want to put in a plug real quick for Laura Fryer.
Oh, yeah.
You know,
Sure.
Laura, if you haven't discovered her YouTube videos,
It's excellent.
They're really, really good stuff. And over and over again, this idea of listening to your customers, like really having a culture that listens to feedback and incorporates it, is a key theme.
It's the very modern thing on game. I mean, I think a lot of us came up in the era of where you never talked about your game outside of, you know, because that's the publisher's beat. And now today, effectively, publishers have been asking you to make that beat by yourself. And so one of the things I look for in studios as clients, and Scott, you probably have a similar filter, but I've been looking for clients who are more interested in open development, transparency, communicating early, building a community around themselves, because I believe that on the margin in the next 5 years, those guys are going to tend to do better.
I think you're absolutely right. I mean, the thing that I love about seeing more people doing that too is that even in the older model, at least in my experience, the greatest predictor of success, or one of the greatest predictors of success, was the number of iterations, meaningful iterations, you would get in front of a representative audience. And that's one of the reasons that when I hear like what Jen says and like what other teams who are doing that as early as possible, right, that's the kind of thing you're not going to see out of large console maker with traditional, you know,
Totally.
marketing background, or, you know, traditional marketing calendar. In some cases, they don't even want anybody outside the company to know the game exists.
Exactly.
Until a year before launch, and it's actually too late to fix the core problems. Not that any consoles would have launched any big expensive games like that had those problems in the last couple of years.
That would never happen.
Nope, not in this industry.
How much time do we have left? Zero time. So I have now effectively robbed
Great
you
job,
of your
moderator.
Q&A, but you can complain. But we don't have time for one Q&A? All right, yeah, all right. So who's going to be it?
Who's our one?
Raise your hand like, oh, I see, okay. Over right there. No, you that's looking around. Who are you?
I loved your insight about the game industry not publishing a riot every 2 years. My question was, do you guys think of these live service games like Roblox or Fortnite as some kind of existential threat to kind of the way that we do games now, as some of these younger generations aren't leaving these platforms and they're kind of so sticky, right? For a lot of aspiring indie developers or people getting started, should they just start on Roblox?
It's much more viable than it was, call it 10 years ago, right? If you look at the history of Roblox, you end up with this super flat line that suddenly goes, hello, right? And so these days, there are people that are funding startups that are building on Roblox today. So that is definitely a thing. When you say these platforms, though, I think that some of that has proven to be a little bit overblown because it's really Roblox, right? I did have one of the companies I was working with was a UEFN-based startup, and then, when you're building your business on somebody else's platform, rules can change pretty easy. And so I don't know that there are multiple environments right now, but yeah, Roblox is a thing. I don't think it's going anywhere.
I am super excited about Roblox as a funnel, particularly for underserved audiences. And I think we need to be more nuanced when we talk about the impact of Roblox, because what I have seen consistently, both firsthand with my kids, but also in data, is that it's not that players are not leaving Roblox that's the problem. Yeah, they're staying in Roblox, but they go from a point in their life where they were on Roblox every day to a point in their life where they're on Roblox once a week, to a point in their life when they're on Roblox once a month. And the question then becomes, as they start to transition their entertainment time elsewhere, where is it going? And so for me, kind of existentially, what I worry about is the 13-year-old girl who's been on Roblox for the last 5 years, still pops in once a week to play Grow a Garden with her friends, but is now going to YouTube Shorts. That's the audience I want to bring back to games. And I think that is like the existential games industry threat. It's not, oh, what about Roblox? It's, what about when they start moving entertainment time away from Roblox, out of games entirely? And how do we reach that audience, and how do we bring them back?
Ed, do you have anything?
Yeah, I'll just be a little contrarian. I mean, we've made several investments in Roblox, and we have a great investment in a company called Look North World, one of the co-founders of Bungie. They've been having some success across UEFN and Roblox platform. But the platforms are difficult because so little profit actually ends up getting back to the game developers.
Yeah.
And that's what makes it really hard. You can see the big headlines, but it's like twice as bad as having a publisher, basically. From a percentage basis about how much money is actually going to make it to the developer. And so you get a lot of what I call, it's probably not a kind thing, and I need a better phrase, but I call them unprofessional developers.
Yeah.
Like teenage guys getting their first start, and I was one too. But I was unprofessional, and so that when your whole platform's built on that, but it can't support a professional development team at real salaries. I think that's a problem.
Yep, agree. Well, I know we are at an end, and they're going to push us off. But if you see any of us are walking around, I'm sure you can ask us your question, and you can see who's best fit for that. But I want to thank everyone here in the audience in the stage with me today for answering my questions and having this conversation. Thank you, guys.
Thank you.
Thank you, sir.
Thank you.
Thank you all for coming.